Hello friends, welcome back to another chapter of A to Z Accounting Pro. Today we are going to discuss depreciation and the treatment of the same in various financials. So before starting, I'm just reminding you that we are discussing the complete corporate accounting of companies all over the world attempts these methods, and we are going to practically explaining the daily work of an accountant. Okay, so today we are going to discuss how the depreciation is calculated and what are the journal entries required to pass on a monthly basis. So let us go back to JV's journal entries. Yeah. So before starting, all of you knows the shortcut that we have created to remember, to memorize, or to identify the required journal entries. It is very simple method. Anyone can easily memorize these journalizing method. Okay. Any addition, any increase in assets and expenses will be debited. Any increase in liabilities and revenue will be credited, and the opposite will be here. Opposite means decrease will be credited, and here decrease will be debited. So here for depreciation, uh, the generally accepted accounting principle GAAP, yeah, all over the world, GAAP world, they uh, it is a must requirement to depreciate all the assets, to depreciate all the assets in a company, yeah, except land, with a given percentage, whatever percentage that will be decided by the management. Okay. Now here, for example, we are going to discuss this entry. Okay, the company bought three computers from Messrs. A.com at the rate of 2,500 US dollars each for credit on 1st May 2023. The company has bought three computers. Okay, at 2,500 each. So the entry for this will be what will be the entry? So if we go back to the shortcut method, you can easily remember this. Bought three computers. Computers are an asset of the company. So because that we are going to use it for more than a year, yeah, and these computers will be in the company for more than a year, 3 4 5 years, like that. Okay, so the useful value, most economical useful period will be decided by the management. So maybe they are going to use it for 4 years, 5 years, 6 years. That is up to the management of the company. Okay, now for passing the journal entry, all of you know the journal entry for the same. So again, I'm going to discuss this very fast. Okay, three computers. Computers is an asset, so there is a plus because three computers came in plus in assets. Then so the asset account, the concerned asset has account has to be debited, which is here computers or IT products and office site equipment. So 7,500 because 3 into 2,500, 7,500, and uh, this is bought on credit from Messrs. A.com. Messrs. A.com is a trade payable account, right? It is a liability. This amount 7,500 has to pay after the credit period to Messrs. A.com. So this Messrs. A.com is a trade payable account because we are liable to pay 7,500. Liable, we are liable. Liable means it's a liability, right? We need to pay to them. It is a liability towards the company. Okay, so if it is a liability account, then what will happen? Because the liability account here is increasing, right? With 7,500. So if it is increasing, we need to credit that account. So this is simple. We have passed the first initial journal entry while the three computers came into the business. Okay. Now the question: what will happen to those three computers after came into the assets? We need to depreciate those three computers for a given period. Okay, as per generally accepted accounting principles all over the world, this has to show on a monthly basis in the financial statements. Some of the companies they shows on a yearly basis the depreciation, but the preference will be most of the companies, majority of the companies will be closing their month on a monthly. I mean, per year there will be 12 closings, proper closing of accounts. Proper closing means all the provisions, depreciations, everything has to be calculated, and those has to be recorded properly into the books of accounts. So here let us go to the depreciation calculation of these three computers. Here I have created an easy chart for you. This is very simple. Okay, we are going to discuss the straight line method of depreciation because majority of the companies are adapting or following this straight line method, which is very simple. This is the entry we have just passed in the books, and for this entry we need to pass the depreciation, three computers. Okay, so this here the management has to decide what percentage they are going to depreciate each and every asset. So this percentage will vary based on the management decision. So if the management thinks that this product can be useful for the coming 5 years, it can be depreciated for the 5 years. If the warranty period is for 10 years and they think okay this can be depreciated for 10 years, okay, this can be done based on the management's, this is a discretionary power of the management. So this 7,500 dirhams on 1st May came into business as three computers. So this three computers has to depreciate in 4 years, which is 25 percentage per year. So here I have given how it is, how we are going to calculate it. 7,500 into 25 percentage. So first year the depreciation amount will be 1,875. Second year another 1,875. So at the end of the fourth year the total depreciation will be 7,500. Right, so this the value of this laptop becomes zero at the end of the fourth year, which means the company has economically used that product. Okay, and uh, our work, the accountant's work, is to record these entries on a monthly basis with proper calculations in the books, and we need to show this in the financial statements. Okay, now we need to calculate the depreciation, what amount of depreciation we are going to write off or pass the entry at the end of each month. Okay, for example, this is about on 1st May, so let us calculate the depreciation for May. So what will be on 31st May? So here I have given a just an explanation: date, description, amount, depreciation percentage, and depreciation for the month. This is important. This is for three computers on a monthly basis. We need to depreciate 159.25. How we arrived at this, I will let you know. Here the calculation I have mentioned. So the total computers amount is 7,500. So the management has decided to depreciate it 4 years, or let us say 25 percentage, and we need to annualize the same, okay, to get the daily depreciation of those three computers, which will be, to analyze that one we need to divide that amount divided by 365. Okay, so this is the 1 day depreciation for those three computers this 1 day. So what will be the depreciation for May? So May, since May is 31 days, right? So 5.1 into 31. So this is the 159.25 will be the depreciation for the month of May. Now, now we need to pass the journal entry. What is the journal entry for passing this 159 at the end of 31st May? Okay, here uh, this item, these three computers is an asset which we have booked into booked into the IT products office equipments account with 7,500. So at the end of the fourth year, this 7,500 has to become zero because the company has decided only economically to use these computers only for 4 years. After 4 years, either they can sell it or they can throw it, whatever. So this 7,500 has to be zero at the end of the fourth year. So our journal entry has to pass those this amount. Journal entry has to pass this amount on a monthly basis. Okay, on a monthly basis for all the 4 years until this amount becomes zero in the assets. Okay, until this account becomes zero in the assets. So for that, here we have debited the asset. So depreciation, while passing the depreciation, we need to uh, we need to pass journal entries properly with question and with proper calculation like this 159.25. So the entry will be the depreciation, there is the entry will be because I will be discussing the entry wide shortened with you because one second, there is a term called depreciation, right? So depreciation, what is depreciation? Depreciation, this 159.25 per month or 5 US dollar per day is an expense to the company. 5 point depreciation per day. This is an expense, daily expense for using those three computers to the company, right? So this is called depreciation per day, right? So this account on a daily basis, this much amount we need to convert into expenses. This is the cost of using those three computers on a daily basis. So in May, 159.25 US dollars is the value of using those computers for 1 month. So we need to create an account called depreciation account in the profit and loss account, right? Depreciation account, and what will happen, this depreciation is increasing, right? 5.137, and depreciation account is an expense account, right? If an expense account is increasing, what will happen? Expense account is increasing. So if an expense account is increasing, we need to debit that account, right? Yeah, so depreciation account need to be debited with how much? At the end of 31st May, we need to debit 159.25. And which account will be credited? So we need to make this value 7500 to 0. So here to make it 0 on a monthly basis, we need to credit this asset account, right? But as per generally accepted accounting principles, we credit those monthly depreciation, or whatever we are passing the entry, whatever we are writing of the depreciation, we need to create an account in the balance sheet, okay, in the balance sheet called accumulated depreciation. Accumulated depreciation will be credited. So why we are crediting this accumulated depreciation? So this is a P&L account, okay, just remember this is a P&L account and this is a balance sheet account, okay, which will come under property, plant and equipment. So this assets also will come under PPE account, right? Property, plant and equipment, because these are generally called, all the assets of the company called property, plant and equipments group. So here, instead of crediting directly the asset account, we are creating another account called accumulated depreciation. Okay. So at the end of the fourth year, at the end of the fourth year, in the balance sheet, this accumulated depreciation of these three computers, what will be the value at the end of the fourth year? It will be 7500. So there is 7000, there will be at the end of the fourth year there will be 7500 credit here, and this account will be there intact with the 7500 debit, right? 7500 debit, the assets account will be there, and another account in the same category in the balance sheet, you can see a credit account with 7500, which makes 0, right? Debit of 7500 and credit of 7500 will make 0. So that three computers value, yeah, value will be 0, and that is this 7000. To reach this 7500, we need to properly control and follow the rules of this straight line method of journal entry, which is very simple, and this is the only entry we require to pass on a monthly basis. So I hope you all understood this um, because I have explained this very quickly. So if you have any doubts, any comments, just you can comment on the video, or if still you didn't understand this concept, you can just let me know. We can discuss this. This is very simple method, okay? And if like I said, if you have any clarifications required, just comment, okay? If you understand this video, please subscribe the channel and like the video. Also share it with your friends, so this will help them also um, to learn more practical accounting, okay? So that's all for today, and thank you for watching the video.